Hey guys, welcome back to the mentoring session. I'm going to finish setting this room up real quick and we'll get started shortly with the session for today. All right, let's see. It's good. It's good. Update this a little bit. Mentoring session. All right, looks good. Let me get this link sent out to you guys here in the premium, the mentoring group. And I'll give it a few moments for people to make their way in. All right, so let's see. I'll get a few more moments for people to make their way in. If there's any questions that you guys have, feel free to put them in the chat. There's not really too much to cover today because there was only two entries that came up, which would be the breakout V3 and the PRB entry. There's no official entries that came up during the live sessions with regard to the V1 variation with confluence or the breakout V3 continuation with confluence either, because as you guys can see, I still have the chart open here. Price has pretty much just been sitting in between this area for the entire session. And even though price did push up right here, it's still sitting within these sessions up here as well. So not really too much to work with, but if you guys have any questions or there's anything specific that you want me to cover, feel free to, obviously put them in the chat. So let's get a few more moments for people to continue joining in, but for the most part, we pretty much have, pretty straightforward game plan for the day. All right, let's see. All right, so Ross wants us to cover the PA drawdown rule, and Daniel wants me to cover breakout V3. So let's start off with Daniel first, because it's a lot easier for me to just cover that real quick. So for the breakout B3, or actually let me start off with, because I don't think everybody's here yet. Let's just go over the PA drawdown rule with Ross. So Ross, the PA drawdown rule is slightly different because once you make a certain amount of profit, then you don't really have a drawdown anymore until you go back into negative profit. So I don't know if this is exactly how it works, but I have a general understanding of like how it works. And I'm going to be extra careful to be even more cautious on top of that. So with the PA drawdown rule, and let me just see if I can just scroll over here where it's a clean area. So the PA drawdown rule, once you're funded, and I'll just draw a couple lines here. And we'll color this. We'll color them different colors so that you can kind of see. What color is blue? And of course, my text is still not working. Put this right here. Okay, so this is going to be, we'll just say account balance at 150K. We'll do that, right? So you say, for example, this is the account balance right there. Do trailing drawdown. Okay, so say, for example, you get a brand new PA account, right? 150K. So Ross, this is typically where you'll start at, right? Or this is where you'll always start at. You'll start out with a balance of 150K. Your trailing drawdown is at 145K, right? So this is basically where you would start at. And say, for example, you made 5,000, right? You made 5,000. This goes up a little bit. You're now at 155K. And with that said, your trailing drawdown follows you, and your trailing drawdown is now at 150K, right? So this is where it becomes different, because in this situation here is where it changes slightly because oh shit. What was that? I'm not in any positions. Fuck. That was weird. Did you guys hear that? It said order filled, but I'm not on anything over here. Let me check my trade update real quick. I was just closing out my laptop and it said that I was in a position. Fuck, where did it even come from? I'm not logged into anything here. I don't know. My Mac's been like making noises lately. Yeah, let me check all my positions over here. Oh shit. Okay. Actually, I accidentally when I was closing my NinjaTrader, my clicker was right next to the buy market button and it entered a position for buy and it actually took it on other accounts and I made profit on it. Well, I guess it just recouped some of my profits. That's my bad. Okay, so I was trying to close my NinjaTrader and I accidentally, if you guys use NinjaTrader, you know the buttons are so close to the X button. And I accidentally clicked on buy market when I was trying to close it out, and it took a trade. Here, I'll show you guys. Just take a screenshot of this. So it took a trade for a buy, and then it spiked up right there, and it ended up winning for 100 pips because I had my ATM set at 100, and then just kind of okay. So it only took on certain accounts because I had to like disable the first one because that's the one that hit drawdown. But okay, I'm gonna turn off my thing now so it doesn't do that again. Sorry guys, that was just it tripped me out. I'll just post this in the mentoring group so people don't think I'm trading outside of live. I wish there was a way to like adjust where the button's at because the button's right next to the X. So like here, let me show you guys real quick. Here it is over here. So mentoring group, you can see like some of my accounts are like they recouped a lot of the loss. So this is the account over here that I was mainly trading on. This is the one that I got to my drawdown on. So I'm just going to reset this later. And then I don't know what happened, but it only copied on some of my accounts because I think I messed with my Rebel console when I changed it out because I changed it to my second account here. This is now the main account. So you can see over here, the profits are a lot, or the losses are a lot smaller. I was at like 1,800 loss and then now it's at 470. So it looks like I made about like 1,200 on that trade. It wasn't really a trade though. It was kind of just an accident. But yeah, it went up like I accidentally clicked it. It shot up right here, went 100 pips, hit my TP, and then closed me out. So that's kind of it was a good mistake, but a bad mistake overall. Let me just close my thing. I don't want to make sure I don't do that again. All right, we're good. Okay, so back to what we were saying here. So I was explaining the PA drawdown to uh to Ross. Yeah, Kip said I always close by the dashboard, not the chart, just because of that. Yeah, no, that makes that makes a lot more sense, Kip. So I'm gonna do that next. I closed off the chart button and it was so close to the sell market button, sell and buy market button. But okay, now that we got that cleared up. Back to what I was saying with Ross. So Ross, initially you'll start with a 150K account or 150K balance. Once you make your way to 150K account, or once you make some profit on it, 5,000, your trailing drawdown will follow, right, to 150K. So at this point, this is where it starts to be a little different. So over here, now once you get to say 160,000, say you just made some more profit, you're now at 160,000, I'll move this up a little bit. And then now your trailing drawdown goes up to 155,000, right? Okay, at this point right here, this is where it becomes different because the trailing drawdown doesn't move anymore at this point. This is why I was saying, if you guys want to trade this way, or if you guys want to, once you guys get funded, don't expect to get payouts right away because you want to build that foundation. So for example, here, once you're up 10,000, your trailing drawdown is at 150,000. And now whenever you go up any higher, so say for example, you just win another trade, you're now up 165,000, right? At this point now, you could just keep going up. And then say, for example, you go up to like 170 and you just keep going up higher and higher and higher, and your trailing drawdown doesn't go anywhere. So now your drawdown is like way farther down. Like for example, you go up to like 175,000. And now your trailing drawdown is 20,000. You could lose like a bunch of trades here and you'll still be perfectly fine. And then if you want to get a payout, you want to keep some cushion there. So like I'll probably build my account to like maybe, I don't know, like 180K or somewhere around there, like where there's like enough cushion here for me to and then say for example you want to make a withdrawal, right? So say for example you're like, okay, great. I did great so far. I now want to make a withdrawal of 5,000. You go back to 170K. You go down 5,000 and your trailing drawdown just stays there. So it doesn't move. It just stays at 155. So at this point, you just got to make sure you don't go back down to 155 because that's the only way you could blow your account, right? So once you get a PA, that's why like people like Maddie's a clear example. Maddie hasn't gotten a payout yet, I don't believe, with Apex because he wants to build that foundation right here so that it's like pretty much impossible to blow his account, right? And if he ever needs to lower his account size, he can, but he's just going to have so much cushion here where he doesn't need to ever worry about it. So does that make sense, Ross? And if anybody, if this is wrong, then let me know. But this is my understanding of like how the trailing drawdown works for PA. I'm not sure if this is right or wrong, Kip. I know you're one of the people who let's see. Maria said, I believe the trailing drawdown is always 5K below the new account. Here, let's do that. Let's look it up together so we can, because I personally don't know for sure. And this is the only way we could find out. So let's do this. FAQ. Gotcha. Okay. Thanks, Kip. All right. So that's actually better if that's the case. So Kip says the P8 trailing drawdown stops at 100 above starting balance. So I guess it's about 5,001. So if that's the case, then that's even better. So 150,000. If that's the case, then because I thought it was 5,000, but again, I'm not at that level, so I don't know yet where it's at. Let's see. Showing drawdown. Yeah, let's see. Gosh, okay. So yeah, I guess I was kind of right, but it wasn't 5,000, it was 100. Thanks, Kip. So basically your trailing drawdown stops at 1,500 or 150,100. That's pretty much where it stops at. So like I was saying before, I mean, same difference. I would still build my cushion to like maybe I probably won't make any withdrawals until like 160, right? Because I still want that cushion, like at least a $10,000 cushion or even more. So, and it wouldn't really matter because at that point you're going to be doing you're going to be getting, what's it called? You're going to be getting, you're going to be capped on like how much you can withdraw anyway. So it's not really a big deal. I probably won't withdraw like within the first month and then I'll probably just build it up. Okay, gotcha. Yeah, Kip said then take payouts only to balance of 160K. Exactly. Yeah. So I'm gonna probably go for like maybe a month or 2 months without requesting a payout to build the cushion. And then at that point, you'll just always have like 10,000 drawdown, which is more than enough because you can always just lower your lot size. Like if you start to go on a losing streak, which will happen sometimes, it's just that's how trading is sometimes. You're gonna go on a losing streak, you just lower your lot size, and once the market picks back up, then you'll go back to your regular contract size. Madhu said you have to reach 5,000 in profit for your trailing drawdown to stop until you reach. Oh, okay, gotcha. Yeah. So that's where that's where I got confused. So what Madhu said is that you have to reach 5,000 in profit, and then your drawdown will go to because your drawdown initially starts below, right? So your drawdown is initially 45. Okay, so now I know how to explain it. Thanks, guys, for your input. So now it makes sense to me. Let's do it over again. So say you start right here. Your trailing drawdown is at 145. Your account balance is 150, right? Say you make 5,000 profit. Or let's say 1,500 or 155,100, right? We'll say that. That makes more sense. Okay, so say for example, you made some profit. You're now at a 155,100. And then from here, you're going to your drawdown will move up and it's now at 150. And then that's pretty much where it stops at. And then from there, you just keep building your account, right? And then now that if you move up to 160,000, so you make a little more profit, your trailing drawdown does not follow it. So it just stays there. And then you say you go up to 170,000, trailing drawdown just stays down there. So yeah, that makes sense. Okay, so does that make sense now, Ross? Thanks, guys, for everybody's input because I didn't know myself. I was kind of onto it, but it's actually better this way because you have a lot more drawdown now at this point. It's not at 55, it's at 5,100. So it makes a lot of sense now. Okay, thanks, guys, for that. So yeah, like I said, the trailing drawdown rule doesn't really, it's not going to affect me too much because I'm not going to take unnecessary risk anyways. I'm going to take it to the point where I'm at like 160 and then I'm like, okay, then at that point I'll start making some payouts. And it's not a big deal because you're going to be capped out for like the first 3 months anyways. It's not like you can just take everything out. So Yeah, if that's the case, that's what I'm gonna do. And I think I'm probably once I'm on the PA accounts, I'm gonna drop my contract size to like 5 contract. And then yeah, I mean that's pretty much how that's my game plan for it. And let me scroll up real quick. So that's it with that question right there. The next question was regarding the breakout V3 from Daniel. I'll cover that right now. Let me see over here real quick. Let me just scroll down and see, make sure I'm not missing anything else. Miriam is asking, are you sure this applies to TradeAvate accounts? What do you mean by that, Miriam? Because technically all the accounts are TradeAvate accounts. That's the whole broker that they work with. So like I mean, all the accounts are TradeAvate. Like if you're on Rhythmic, you're still using a TradeAvate. If you're on TradeAvate, you're using TradeAvate. If you're on NinjaTrader, you're on TradeAvate. So is there like, sorry, I'm just confused with your question because it applies to pretty much all accounts because they're all TradeAvate. Like the whole platform runs on TradeAvate accounts. So even if you don't sign up for a TradeAvate and you sign up for Rhythmic, you're still technically trading on TradeAvate. So yeah, if you want to clarify a little more, Miriam, we can go into it, but I'm just not sure what your question is referring to. So I'll come back to your question, Miriam. If you have any more like any more details on like what you're asking, just feel free to include it and then we can go over that. But for the most part, all the accounts are TradeAvate, in a sense. Like if you log into Miriam said, I did not realize a trillion drawdown freezes after a point. This only happens when you're funded. So once you're funded on a PA account, that's when it happens. If you're on an evaluation, it still follows until you pass. Because your profit goal is 9,000 on a 150K account. So it's going to keep following. It doesn't stop right there. It keeps following higher and higher and higher. So say for example, you're on an eval account and you're at like 159. Your trailing drawdown is going to follow you to 155 or 154. And the reason they do this is because they don't want you to just stop trading, right? You need to keep trading and build up. They want you to have a bullish curve like this when you're getting funded. They don't want you to be a trader that gets lucky, right? This is why a lot of people don't like Apex because they don't know how to trade consistently. They don't want people who are trading like this all over the place, right? They don't want and I'm sure you guys have seen this before. Like if you guys see some people's FTMO accounts, like their metrics, it looks like this. It's all over the place. They want someone who's consistent, right? Consistently growing. Because if you're doing something like this, you're going to be a long-term trader, right? You're going to win a little bit, break even or lose, win a little bit, break even, lose, win a little bit, break even, lose. You're not going to be erratic all over the place. So it freezes only for the funded accounts, not for the evaluation. So until you're funded, it's going to trail. But once you're funded, it's not going to trail anymore because they actually want you to stay funded. Yeah, Kip, I see your question right there. So Kip's asking, not sure if the mentoring session is good for this. So I'll take a look at that right after I'm done with the breakout V3 question, Kip. So let's go over and answer Daniel's question first. So Daniel's asking for the breakout V3, doesn't the V1 pattern have to show up after market open? So no, it has the only thing that you're looking for after market open is the momentum signal. So for the breakout V3 continuation over here, this is the entry that we took today. The pattern happened before this, but for the actual entry, because here's the thing, if you're looking for the entry that happens like after it, it's going to be too late already at that point. And from all the testing that we've done, I mean, you're not always going to get the entry that happens right away, like right on the open right here. Sometimes you're going to get it later, but on the open right here, you're only looking like the only thing that you're looking for after open is going to be the momentum. The V1 pattern could happen before or could happen after. So It's not necessary that it's at a certain time. Let me see the spreadsheet over here. So I think this was one of the entries. I'm gonna try to find a so same thing with this right here. So this was the entry that happened on, or no, this isn't a good example because this did happen after. I'm gonna try to find an example here. I'm just gonna look at the timestamp. I don't have 6:35. Okay, so here's an example of it happening before, or no, this doesn't work either because it happened like literally right there. But this goes back to what I was just mentioning. Like it doesn't happen very often. Maybe this one right here. Okay, so here's an example. So this one, the V1 happened before market open. Market open right here at 6:30. Entry happened right here at 6:32, and then the entry just played through. So this is an example of like from my testing that it doesn't happen very often, but when it does happen, it still works. So that's why we still use it prior. Because if not, we're probably like never gonna get an entry. Or let me see. Let's look at our losses and let me see if there's anything here that we could pull from it. No. Let me see the timestamps for the losses. Yeah, there's nothing here that really jumps out that shows that, okay, we can't take certain trades. The only thing that I saw here that really stood out is when the trades happen super, super late. So I'm trying to figure out the cutoff time because one entry here happened at 8:03, which one? And then the only loss that we had that was super far out was over here at like 8:54. But obviously I wouldn't be on the live at that time. That's way too late for me to be trading. And you can see how like it just took forever for it to actually move. But yeah, for the most part, Daniel, the V1 pattern can happen before. The only thing that we're really looking for after is going to be the momentum signal. So that's what the case would be there for, that specific strategy. So a question from Kip's asking, let me go pull up real quick the Discord. Let's see. All right, that's what Kip said. You're talking about the criteria, right, Kip? So Kip said criteria during mentorship, confirm momentum, look for consolidated candle. Oh yeah, okay, I see what you're saying. If we should include momentum. So let me see. The problem with that is that, well, I would have to actually look through the data. So let's see. Because I think a lot of these entries here don't actually have momentum. Yeah, like this one over here, Kip didn't have momentum. That was a win on the 29th, 30th. This one also didn't have momentum. First, this one did have momentum. Second, this did have momentum. Yeah, because the problem with this here, so this one over here did have momentum. The problem with us adding that criteria is that if there's too much criteria, then there's gonna be a lot of times where there's no entry. And that's gonna mess with the win-loss ratio. This one here did have momentum, but it's still lost. So from what I've pulled here, this one didn't have momentum and it lost. Yeah, I don't think there's enough data for us to really incorporate that just yet. I mean, in the future, yeah, of course, like right here, I'm pulling up all the data as we speak, and we can kind of see what has momentum and what doesn't. This one over here had momentum. This one here lost and it had momentum. Yeah, I don't think there's enough data yet, Kip. So, I mean, that's a good thing that you mentioned, but there's just I don't think we have enough data for it specifically. Yeah, because this one here lost too. That's the one that you said could have been avoided. So at the moment, we just don't have enough data to determine whether momentum is really necessary. Um, but I guess we'll see like with time. Yeah, Kip said originally we did, but we didn't. I don't think we ever did we? Where'd you get the criteria from before? Okay, was that what I posted in Discord? I mean, I might have missed it because the requirements and we'll probably just talk about this privately with the group, with me, you, and Maddie, but the requirements that we've been following, that we never used momentum. They were just on the chart, but we never really used momentum. It was based off the pivots. Um, that's probably already releasing a little too much info. It was always based off the pivots and the candle structure. So I don't think we ever used momentum for the PRB. It was always the momentum was a confluence, but it wasn't a requirement. The requirement was that we just had price push in a direction, retrace down. Um, 1 second. Sorry, guys. Kodi Kai's mom's here. But anyways, yeah. So I don't know if we ever had that criteria there for momentum. I mean, I could be wrong, Kip, but maybe I just overlooked it. But we'll talk about this with Maddie because we don't actually have requirements for the we don't have requirements for the PRB yet. Well, not requirements that are released to the public. It's mainly requirements that are just kind of what me and Maddie are following for the most part. So we'll talk about that a little later in the chat. But I don't think there was ever. Let me just I'll tag Maddie in it. And I'm like, did you hear? Did you hear? Just got home. Uh, yeah, we'll do an admin Zoom a little later, guys, so we can talk about it. Okay. Because I don't want to release too much information about the PRB when it's not like set in stone. But I don't remember there ever being momentum there. Yeah, see, so Randy said, yeah, you mentioned in one of the live sessions that the momentum is confirmed leading up to the PRB, but I think you said it out of muscle memory, not necessarily out of the strategy. Yeah, because I've mentioned it before, but not exactly like as one of the requirements. Because just to be straight up, guys, like we don't use momentum for it. Like there's no need for it, but it's a confluence. So like for example, what we're really looking for here is just the pivots. That's kind of what we're using here. We're looking for price action to basically push away, come back up, sideways movement, and then continuation, right? That's sort of what the strategy entails. So yeah, we don't have set requirements. I mean, we do have set requirements, but it's not set requirements that we're ready to share because, as you mentioned, the strategy is still fairly new. It's still in its testing phase, but we are taking it as official entries because it works. But there's still like kinks that need to be fixed out of it. But for the most part, yeah, the momentum is not really necessary. We mainly use the pivots and price action. That's what makes it discretionary for the most part. So yeah, well, we'll set up a Zoom a little later, Kip, to talk about that more in detail. But all right, guys, if there's any other questions, feel free to put them in the chat. Otherwise, we'll cover the entries right here. So the first entry is the PRB. And I'll go over this a little more in detail, just like I mentioned. So market open over here at 6:30. When market opened here at 6:30, we were looking for the retracement and rejection off structure, which would be the pivot. That's exactly what we found here, right? Price pushed up, came back down, rejected off the structure here, and it came right back up. It's just basic price action. This is, and again, I'm taking off the momentum here to show you guys that like the momentum is not really necessary. It does help, but it's not necessary. Because, it'll give you more confidence with your entry here. So price pushed up, came back down, rejected off the pivot, shot right back up. The space happened, let's see. So space happened right here. Okay, so like if we were to use that criteria, this actually would have been, I don't think we'd be able to avoid this loss. Oh no, actually you're right. Because the sell signal did come up right here. But anyways, back to the PRB. Price pushed up. This is the first criteria. Price pulled back, rejected off the pivot, shot back up. This right here would be the space because we have a sideways doji candle there. Price goes sideways for a bit. We're looking for it to come back down and push back up from there. So that's literally what we're looking for here, and that's where our entry came up. Price came down. That right there wasn't the entry point. Price came back up. And this is where the entry happened. So push up, retracement, space, come back down, rejection off the pivot right there, confirmation of continuance right here. And that's pretty much where our entry happened. Entry happened right there. Unfortunately, it came right back down for stop loss, and we lost the trade here for the PRB. So I mean, it's basically a three-step process. Price pushes up, retraces, bounces off the pivot, space, comes back down, retrace, bounce off the pivot, shoot back up, and that's supposed to be our entry. So unfortunately, that's the trade that we took there for the PRB. Luckily, I took it for half contract size, so I didn't have any real risk in the trade. But yeah, if there's any other questions regarding the PRB, guys, this is the entry for the day. Unfortunately, it lost, and that's just one of the entries that we had to eat up for the day. Like I mentioned, I took this with a half contract size. So, and we talked about this last week too. So normally I would take, I don't know if I can copy. Let me see if I could. Okay, so my normal, I'll put normal contract size 12 for one breakout entry. Risk is 1,500. Size 6. So does that make sense to you guys right there? This is why I was able to, this can't be connected. Okay, so this is why I was able to take two trades and only risk the same amount. Because normally I would take 12 contract size for one PRB entry, I'd risk 1,500. For a half contract size, I split it down to 6. So for two entries, I'm still risking 1,500. So with every trade here, and this is why I'm okay with, and I'm glad that we have two entries now because it kind of minimizes the risk. It mitigates the risk to the other entry. So situation. Win BB3 plus win PRB, 1,500 profit. Win BB3 plus lose PRB, 0, break even. Lose BB3 like what happened today. Plus lose PRB. This would be a negative 1,500. So as you guys can see, it's the same thing, right? It's if I was to take one trade, I'd risk 1,500. I'm taking half contract size, so I get two entries for the same risk. Situation right here is you win both entries, you make 1,500. It's like making just one trade. You win one, you lose one, you break even, and you lose both, you still lose the same amount. It's not like you're losing any more than you already do. So that's why I was okay with taking both losses today because it trickled down to like the same loss that would have happened if I just taken one trade. So I just took the PRB today and we didn't include the BB3, then it still would have been the same loss. So just showing you guys there that that's, my thought process behind it. And the reason why I'm okay with this is because I've done the data over here and every day has either been a break even or profit from January 29th up until February 16th, which was Friday. I was hoping today would be at least a break even day, but just it just happened to happen where the first time we had back-to-back losses was the first day we executed it, right? And that's, I don't know, it's just how the world works. I feel like when you least expect it, or when you're most excited for something, that's when the things don't go as planned. But it's okay, it was a good wake-up call that like this here isn't it's not something that can be guaranteed, but for the most part, as long as you're doing low risk, then you'll be able to bounce back from it tomorrow. Like tomorrow we could have a win and then it'll just recoup today's loss. And then the day after that, we could have another win and it'll just keep stacking up the wins from there. So Cameron said, yeah, for real, on the first day I funded too. Okay, let me scroll up real quick. Maria has a question over here. Maria's asking, why didn't you consider 640 as a PRB entry? Because the entry, so again, the requirements are set in place, Maria. So there's no other entry there. So let's see, you said the entry here at 640, right? There's no rejection off the pivot down here. You have to reject off the structure. Here's the thing with the PRB, guys. I have the requirements here. So there's not going to be any entry here because there's no rejection off any of these. And even if you're going over the criteria, Maria, it still wouldn't work because price never came down and shot back up, right? That's why it's this candle right here. So you're asking, so I'm gonna let you explain to me. Explain to me why would this be the entry, right? So because I want to hear your thought process behind it. Because like I mentioned before, the criteria is price pushes up. Even if you were not to have the pivots here, right? Price pushes up, it comes down sharply and it pushes back up. The pivots here are just visualization. It helps you visualize where it actually rejects off. But even if you didn't have the pivot here, you can see that it's just basic price action. Price pushes up, it has a big wick right here, and then it pushes up, right? So it comes down, and it initially at some point it was down here, and then it pushed up. So that's what you're looking for. This right here is complete opposite. You have the wick on top, so why would you take a trade there for a buy if it's pushing down? It's not pushing up, right? So I mean, if you want, you can explain it, Maria. I just want to hear your thought process behind it, because so let's compare the two, right? So Maria says the entry should have happened right here. I don't see any reason for this to be the entry because price did come back down, but there's no push back up. Look how small this body is, right? This here has a body up top because it shows that price started up here. It came down and it shot right back up. So there's all this power right here, right? This is all volume down here pushing to the upside. This right here, there's no volume on the bottom. Even for this candle prior, there's no volume on the bottom. Price is coming down. And yeah, it pushes up, but there's no volume here, right? Now let's look at our actual entry here without the pivots, right? The pivots help you see things because it shows you exactly where the bounces are happening. But doesn't this look like a better candle, Maria? Because I'm trying to compare the two because I'm not sure like how you even got the idea that it happened here at the 640 mark. Like this here is a very clear candle. You can see how price came down and then it shot right up. So even without the pivots and you're just going based off price action, this right here would be the entry. And we have requirements for it. If you turn on the pivots here literally show you exactly where the bounce happens. Bounce, bounce. There's no other bounce before it. So I don't know. I just want to hear your thought process. Okay, let's see. So Maria said, no, the signal was at 639, reject pivot 2. I know that's exactly where I was. So let's go back over here, Maria. So still right here, there's still no rejection off this, right? It doesn't matter if it's this candle or the next one, but let me take the pivots off. This is a doji candle. It shows that there's no power on either side, right, Maria? And I think you're just making it way more complicated than it really is, Maria. I think you should just let me just give you the requirements here. You're looking for rejection off the pivots because I think you're trying to see something that's not there. If I was to show you price action, I feel like you're making it more complicated because if you're just looking at this candle here, there's no power on either side. See how it's like a doji? There's a body here and the wick on the top and the wick on the bottom is the same size. So I feel like if I don't just give you the requirements, you're just gonna make like a bigger mistake because, okay, let me just see, where's your explanation of where the power is coming up? Let me take everything off the charts here. Yeah, because your entries are right here at 640, right? Okay, so let's go back over here to 640. And because I want you to understand this, but it's hard to get you to understand it because it seems like you're kind of so set on this candle here, but there's no strength on the bottom or strength on the top. If anything, this would be a space candle, right? So if I was to just give you the criteria and I told you, okay, you need to reject off the pivot, this becomes a problem because now you're going to use this you're going to have another argument for like, okay, then if it didn't reject off this pivot, then where was the entry? So let's just go off based like this price action alone. You can see over here that this here pushes up, it comes down and it pushes up, right? So you can see how the wick on the bottom is big, right? The wick on the bottom is huge right here. This shows you that price is pushing up. It came down initially and then it's pushing up. You're saying that this here should be the entry after this candle, but I don't see like, where would you even see that? Because price could have pushed up from the bottom. It could have also pushed up from the top, right? Okay, let's see. So Maria's asking, so the 639 candle, yeah, that's what it's always been, Maria. So Maria's asking, so the 630 candle must have a big wick on the bottom. Yeah, that's literally what we're looking for. Like if you listen to my criteria, I mentioned, okay, if it rejects off structure and we have a big wick on the bottom, then we're gonna have an entry. And that's like literally what we were looking for. I'm just confused here because you're thinking that this is the entry, but there's like no push from the bottom. So like there's no way I would identify this as the entry. If anything, I would see this as a space right before even both of these. Like there doesn't necessarily have to be a big wick on the bottom, right? But you have to understand price action, right? That's kind of what I'm trying to get across. Like for example, this has a big wick on the bottom, but this could have had a small wick and a big green candle above it, right? Could it have a big, let me see if I can find. And this is why it's important. So like this right here, right? It doesn't have a huge wick on the bottom, but it has a big body. This here shows that price came down and it's pushing up. And I think if you try to look at things that way and you're not like your eyes aren't trained to see this, you're going to be more confused. Like for example, this right here, this doesn't have a huge wick on the bottom, but it doesn't have a huge wick on top. So this here I would still consider a strong candle. And I think this would just go like a little too deep into like like you have to actually like you have to be what I'd recommend, Maria, if you want to look at this stuff. I think there's a book out there that kind of shows you candlestick patterns. I don't know what it's called, but you can even just look here and you can identify what's a strong candle, what isn't. This becomes a problem because you don't know what's a strong candle or not, right? So it's not just because there's a big wick on the bottom. Like right here is a small wick, strong body. This means it's a strong candle green, and you can see how price pushes up. But what I would recommend is to I think the easiest way for you to understand it more is to go back and review the live session. So just go back every single day, Maria, review the live sessions because I explain in detail like what you're looking for. And I want to explain it in a way that doesn't confuse you. But I already know for sure it's going to confuse you um, because like from your analysis here, that was like such a bad analysis. Like just to be straight up, I don't want to make you feel, but that was like a horrible analysis for like the entry for the PRB, because if you just look at the price action there was like no reason to think for that to be a retracement and correction, right? For pattern wise. So yeah, like what Nick said over here, he said it might also help to go back and re-listen to the live from this morning, just to listen before the entry. I remember us talking about how the candle has to close green and strong rejection off the pivot. So what I do recommend, Maria, if you want to get better at this, which you don't need to, right? If you want to just follow us on the live session, it's just if you want to have reasoning behind the entry, in order for you to have reasoning, you just have to go back and review the sessions because there's requirements for us. That's why like whenever someone has like input of like, okay, you could have entered right here or you could have entered right here, the answer for me is always going to be no, there'd never be an entry there because I have set requirements that I'm taking. And these here don't meet the criteria. But even if I didn't have requirements, I would still have the analysis here to show you that like this here wasn't a strong enough candle for it to retrace and push up. And that's why our entry is right here. Because it's pretty clear. Price pushes up, comes down, retrace, bounces back up, space, space. These are even, you can even consider these space. If you don't consider these space up here, you consider these space because they're like dojis or weak candles. And price pretty much goes sideways. And this green candle right here is like it's like the only standout that shows you where price kind of comes down and bounces off the structure right here. So you can use the pivots as visualization. I use them as visualization as the criteria, but I don't really need the pivots. Like the pivots are there to help me identify trend, but I can just identify price action from looking at the specific candle, right? Retracement, continuation, consolidation, retracement down hard, and push up with a strong green candle for continuation from there. So yeah, if there's any other questions regarding this, the PRB is always going to raise a lot of questions, guys. Like it's okay that Maria asked this question, but I'm hoping that you guys are getting better with time, right? Because it seems like, well, with Maria's question, this kind of threw me off because Maria's analysis was like so off that I'm hoping that you guys are understanding how the strategy is working. So yeah, the PRB is always going to raise questions, but the entry is always going to be pretty obvious because you're going to see a type of candle like this, a strong candle, consolidation, and another strong candle back in that direction. So I'm hoping like over time, yeah, we're still in February, so don't worry. If you guys are not getting it yet, I know it's going to be confusing, but I'm hoping that you guys are getting better and better and better and not getting worse and worse and worse at identifying these entries. Because we've been doing the PRB every day for like, what, a month now? So I'm hoping like with every PRB that you guys identify and listen to, that you guys are getting better at identifying it. So it's okay, Maria, that you identified that, but I'm hoping that you get better at identifying it moving forward. So there's no more confusion or analysis that's like so far off. All right, so that's it with that right there with the PRB. Now let's take a look at the breakout V3 over here. The breakout V3 happened. So let's see, 630 was right here. Market opened. We look for a V1 pattern confluence identifying reversal. So the reversal happened right here. Price came up, came back down, provided a double body rejection off the low, and then it pushed up from this point. As it pushed up from this point right here, we're now looking for the buy signal. Buy signal was pending for like about 3 candles. It finally closed right here. And the next candle right here provided opportunity for entry. So we had the V1 variation here identifying a reversal. So price came up, came back down, reversal from this point, price pushed up. We had a buy signal at this point. And at this point here, we're looking for a green candle to follow it. This is going to be continuation. So we had the setup here. Unfortunately, price did push up slightly, and then it went sideways, and it ended up turning in the opposite direction. So that right there was the breakout V3 continuation. As I mentioned, I'm going to take every single trade. There's a lot of reasons why we could have avoided this. One thing was Andreas mentioned this during the live session. He mentioned that, the price was overextended, and if it was okay that we took it. The only way to get better at the strategy or to like actually trust the strategy is to take it even when things say not to, right? And the only reason I'm okay with taking this is from the data that we pulled here. So I think today was the first time that we've had a back-to-back loss from January 29th up until the 16th. And luckily we took it with a half contract size, so the loss wasn't as big as it could have been. So let's see, Hawk's asking, would the V3 variation break out at 757 be another setup? Here, let me check it out. So Hawk's asking if 757. So this one right here, well, it wouldn't be another breakout, it'd be a continuation because the breakout only happens once a day. So this would be the only one that came up. It'd have to be the first one that came up. This right here would be a continuation entry. So the only difference with this is that you would confirm the trend. See, the structure would have been right there. This would be your breakout V3 continuation with the continuation, this entry happened after 8 o'clock. So the cutoff is 8 o'clock for this entry. So you wouldn't have taken the entry there for that. So no, this wouldn't be an entry. Say, for example, this here wasn't, like say this never came up, the original breakout, then yeah, you could have maybe taken this as the breakout, like the original breakout. But since it came out over here, it's only once a day. So this over here was loss, and there was no opportunity for a second entry. This right here, the entry happened at 8:01. So this would be the cutoff for the continuation. But this would be a continuation setup right here, but you wouldn't have taken it because it's after 8 o'clock. After 8 o'clock is the cutoff because this is when the volatility starts to die down. And you can see it starts to go sideways. So that's the difference between the continuation and the regular breakout. Regular breakout is once a day, and the continuation happens all throughout the session between 6:30 and 8. So I don't know if there was another entry here that came up. Oh, there's no double body there. Nothing there. Nothing there. Nothing there. Yeah. Does that make sense, Hawk? Yeah, because your entry right here, I think you're talking about this one, right? Yeah. Yeah, because the cutoff is 8 o'clock. This is usually where we stop trading. We usually stop trading before this. So at 8 o'clock, we're usually already off the live session, but that's like the official cutoff for entry. Because if you go back and test the data, like around 8 o'clock, this is usually where the market either goes sideways or it fully reverses in the other direction. Yeah. So the breakout would be between 6:30 and 8. And the breakout B3 continuation is the same time. It's just the TP stop loss is different. And you factor in the trend. So we typically don't use the trend for the breakout. You just go straight into whatever the first breakout that comes up. That would be that'd be for the regular breakout. That's for a 25-25. And then for the continuation, that's where you'd be going for a 10-30, but you want to be trading in the direction of the trend, and you also want to be looking out for the red flags. So that's where it's slightly different. Risk reward isn't as good, but it does hit pretty often. It's like a very accurate strategy for what you're aiming for. All right, perfect. So guys, if there's any other questions, let me see. Yeah, Nick said I wouldn't even say that's overextended. I've seen US 30 push way more than that. That was more of just a fake out. Looked like it was going to break out to the upside on New York Open. Then it came back down and consolidated for Trap Tuesday. Yeah, and I agree with you too, Nick. That's why I was okay with eating the loss, because it's Trap Tuesday plus there's not really too much to work with, you know? So, all right, guys, unfortunately, that was today as we officially kick off and the thing that you guys got to keep in mind is that it's a holiday trading week. So it's a holiday trading week. There's a lot of red flags this week. It's holiday trading week. We're coming back from a 4-day weekend. I think the Fed news is getting released today as well, or this week. So there's just a lot of things going on in the market this week that kind of throws the market off. If you guys have noticed, like in the past, the market's typically like this when you come back from a 4-day weekend. This is why I don't like 4-day weekends, because you always get a lot of manipulation on open. And that's exactly what happened today. You guys can see from the clean chart, there was no direction here. Price pushed up and then it faked out and just consolidated and ranged for the entire hour until it consolidated more, and then it broke right back down into even more consolidation. So, all right, guys, I think that's it for today. If you guys have any other questions, feel free to reach out. Otherwise, tomorrow we'll be doing the same thing. Again, like I mentioned, guys, I'm only going to be taking the breakout entry. So I'll be taking the PRB and the BB3 entries pretty much every day. That's pretty much all I'm going to be taking. I'm not going to take any of the other entries. I'm just going to show you guys that, long term, if you guys just keep taking these entries and you use proper risk, you should be able to have no problem, being profitable long term. Again, you guys want to remember, this is a long term game. It's not something where you get rich overnight. You're gonna make profits. You're gonna make some losses, but hopefully by the end of the year, you're going to be very profitable, and you're going to find that consistency time over time. And that's kind of what I built this whole system on, right? The system is built on being a consistently profitable trader long term. Exactly. Yeah, Nick said, I'm right there with you. And the next day, and the next day, and the next day. Yeah, just consistent. So, all right, guys, other than that, I will see you guys back here tomorrow for the next live session.